Friday, February 20th, 9:18 a.m. What is up? This is our trading vlog. We are currently looking at SanDisk. So I don't think I did an update since, I don't know when, it's on one of the videos, but there wasn't enough price action or commentary just to do anything really pretty much yesterday. Both of our trades, SanDisk and American Eagle, shorting the memory trade and shorting the cyclicity of retailers, pretty much just went sideways. So over on SanDisk, I did add one more share. Again, Friday I like to be short things. It seems to be a good day to sell off a little bit. Again, still overall kind of expecting some sort of correction, consolidation, fade, downward movement in the market overall after this 3-year period. These are two stocks that I think are good for having added likelihood of decrease, so we are short these. And so we've just been in these kind of trading momentums kind of channels where there's just not been a break from the momentum sentiment in relation to the price action. So hopefully we get something to commentate on today, but sitting at 2 shares short on SanDisk. The market's pretty much flat, not much going on overall. Over here on American Eagle, not super excited with this one. Again, this price action has been goofy to me. So obviously we're short. This kind of just, it opens up with these large spreads, and then again, I called it back here, even before this initial 25, before this day right over here was like a break of sentiment. But then we kind of just have this like initial kind of upward thing where the spread opens up a little up. We kind of close down, meaning if we have the spread of 40% differential in the spread, the spread will tighten up typically to the lower end, but then it just kind of floats back up and kind of just like flags for the rest of the day. And so not meaning it keeps looking like it wants to break down, but then it just moves down, kind of moves off the bottom, and then it kind of rejects these higher, like this 25 and above. And so I don't really know what to make of it. It closed yesterday right around 24.95. Again, still with the Friday, hoping in the sell-off. Certainly not in a place where I was going to close this regardless. But these last like 3-4 days, you can see it where it bumps above this adaptive moving average, which we like to see it below, but just the actual, again, the intraday, you don't really catch on these daily candles. And so the intraday has been just goofy for me, honestly, for the past like 1, 2, 3, 4, 5, 6, like 3 weeks. But still expecting this at a minimum, this little gap fill to here, but truly trying to, trade it down. When we're looking at 10 years, again, just reviewing our overall prospectus, we have this earnings date coming up on March 4th. That's our next big stimulus, certainly for the sector and for the stock particularly. But if you're looking at, again, 10-year weekly chart, it's only ever traded at these levels like 2-3 other times, and above these levels, once during the rebound from COVID opening up. And so to me, it's just like, it's not a rocket science move, but it's just trading this cyclicity. And this is back at a 20-year chart. And so at these levels, again, like 4 times in the past 20 years. And so, again, not a breakthrough, no breakthrough insight, but just managing our trade. Actual price action has been really goofy. Overall markets, nothing of note for me. Looks like we have a little spread closing or to start, but the open is here in about 8 minutes, so we will check back in after the morning trade. Friday, February 20th, 10:56 a.m. So back in our trading vlog, we had a little stimulus news event, so something to talk about. Gave me a little insight, or at least I think so. So I'll call this as what we just had a Supreme Court ruling on Trump's tariffs, saying that they were unconstitutional, or effectively a sentiment response saying, American businesses are going to get refunded some money. So I guess what the sentiment reaction was is kind of semi good for business as stock go up really quick. And so back here on American Eagle, the stimulus, we see this big girthy candle kind of shoot up here, so we know something's going on. It's clearly the rapidity, the velocity of the movement. I see, why do we say speed and velocity different? What's going on there? But we see a clearly move that is different or outside. Something's going on. And so we pop on our little news channel. It's not, we check to see if it's stock specific, sector specific, or just market in general. Kind of see what's going on. Again, the Trader TV was on. I just have to turn it off for these videos. But we can see that it's very quickly an overall market kind of stimulus. And for a given trade, we expect, well, like I expected this ruling, again, not in a given direction, but I just did not see this event as something that was going to modify my position sizing or trading for the American Eagle or for the memory trade. And so I call these kind of, I don't have a name for it, just these quasi quick little, you get some sort of stimulus and then the stock pretty much goes right back to where it was trading. And that's pretty pervasive throughout the entire market. Again, meaning the United States this stock exchange. I guess what is this technically? I guess this is just technically a brokerage account that has access to different exchanges because different stocks trade on different exchanges. Not the point of this little clip. But regardless, we have some sort of news event. It stimulates the stock, but then it pretty much goes right back to its same trading pattern, or it doesn't. It'll have an extreme move if it's a stock-specific stimulus. Again, just the first thing that comes to mind is when we had Micron, or just again, we're currently in SanDisk, but Micron back in like October, when it went from like 200 something down to like 170 on just like there was some sort of stimulus. It might have been something else to do with the tariff, but there was some immediate stimulus where the initial move caused a continuation of a bigger move for like a day. But this one, it seems, for the Supreme Court ruling, at least for American Eagle, and it seems for the broader, let's check the S&P 500. See, this one kind of continued up, but again, this is a sector or an ETF or I'm trying to be I might sound sloppy with my verbiage, but I'm trying to be more specific because when people say ETF, just the like collective products where it contains more than one, again, just the verbiage of the overall economic discussion is super, super sloppy. And again, we're still in this environment where words have meaning. But now that we're outside of physics and structured logic, right? There's a definitive right answer out there. I have better intuition than most people. And a lot of people just say things super sloppy, and then everyone can get things wrong. So, point being is, what do I call the S&P 500? It's an indice, it's an index. To me, that just equates to an exchange-traded fund, an ETF. Practically, because you have an exchange. That's what we're on here. I'm on TD Ameritrade Schwab, which has, again, I guess that's what you would call it, a brokerage account connected to an exchange. A highly liquid environment. The point being is we have this movement. It seems to be more sustained in the overall S&P 500 than just American Eagle. But point being is the three type of categories you have for me is an extreme movement that then continues in the same direction, an extreme movement that will then revert really quickly and then go extreme in the other direction, or an extreme movement and then it kind of just goes right back to where it's at. So right now, to me, this kind of looks like it's going back to where it's at. But regardless, for a tradable event, I see these as just kind of shaking up the stock. And it's not really indicative. Again, we're short American Eagle. If this would have continued upward, it wouldn't have surprised me very quickly. Again, this all happened kind of within 9 minutes. These are 3-minute candles. So we get this big move up, hit 26. It's still within this bound of, again, I would say 2350 to 26 is like the normal range for which American Eagle's been in for the past like month. And specifically for the past 4 or 5 days, which we keep talking about, just kind of weird trading action where it seems to have like a hard floor, but then any sort of upward pressure just immediately sold off as well, and it kind of just like drifts up. So kind of a more bizarre trading action than I typically see. But regardless, to me, at current time, it looks to be one of these events where it just kind of shakes up the stock and goes back to where it's trading at. Certainly seems to have rejected the initial stimulus to spur it up to the upside, and it has not continued to be some sort of big drop-off. And again, sitting on a stock where American Eagle this past 4 days, I'm expecting some sort of movement. It's just been consolidating in this weird trading pattern for like 4 or 5 days, and for the better part of a month, just in this kind of weird range. We do have earnings coming up, but obviously we're still short. But regardless, I just kind of, again, trying to equate these events to any other portions of sentiment where I see as the same exact phenomenon, but not even necessarily relevant to stocks. And so a similar kind of event to me this is we'll see how it closes. It's 11:03 currently. But like a YouTuber will they'll have like $100,000 subscriber special. Where it's like they're gonna get 100,000 subscribers. They're all excited. YouTube's becoming like a job for them, and they have like a watch party. And so then they go live, and they've either never gone live or they go live very rarely, but you get a different type of notification on your phone. And so in the same way, this is a momentum stimulus for stock trading. You get something that you're not used to from a consumer. Like, hey, I like watching YouTube. This guy popped up on my phone. Maybe I subscribed to him like 3 years ago, and now he's going live, and I haven't seen him then. And they'll start losing subscribers. And so they'll be all excited. They'll have their little hats, and then their subscriber count will go down. The point being is that you have this moment of stimulus, and then it just, it immediately starts appreciating. Again, for the stock market, this one started appreciating, then immediately retraces. For the YouTuber, you're having some appreciation in your subscriber count, just like through organic growth or published videos, meaning not live videos. You go live, and then you get this new type of notification, and your count, either you get an initial spike and then you go down, or you just go down, so on and so forth. Meaning you have some sort of dormancy, some sort of complacency, some sort of just lull back to the stock market in the movement. Some sort of stimulus can make it, like for American Eagle expecting it to go down, it could, like, just the overall stimulus could cause it to break. It does. I have seen that pretty frequently, enough for me to talk about it. Doesn't seem to be happening currently. Again, this overall movement's really strange. This 11 o'clock hour is not a really high volume or high focus time. And so that's kind of what I equate it to. Just anytime you stimulate something, provoke something that's just been dormant for a little bit, it can kind of it just gets more volatile for a brief time. And then the direction in which that volatility is going to go, you don't really know. And so I see that to be very similar with this kind of Supreme Court announcement. Or again, just ruling on the tariff itself. Again, it's another one of those things where it's, to me, certainly has substantial economic impact. What economic impact that is, to me, has not been articulated, not been discussed in a way where it's like, that is for sure what's happening. And so the other thing I wanted to discuss is this. They keep using the term priced in, right? I forget who was on the screen, Carl Cantanilla, probably. Oh, it's good to be king. Oh, he gives you a chance. Come on, Carl, open your mouth, buddy, and tell the truth. But anyway, Carl said, or somebody said, that this is priced in. A phrase you'll hear all the time. This stimulus, this event was priced in. Which, that is to me, again, as we've referenced, the opposite to the market is irrational, right? If something is priced in, people have, rationally understood this piece of data, and it's priced into the price action. Nope. I'm going hard nope. Absolutely not. Nothing is ever priced in. Human beings are idiots. The irrationality of the market is profoundly more apparent. We were over here reading with Mr. Sorkin about how we are lining up. We have our lawn chairs. We have our banners. We're rooting for our favorite corn exchange and I forget which company, the Copper, but people lining up. The exuberance and the irrationality of human behavior is overwhelmingly apparent. And so who wins? Is something priced in, or is the market irrational? The market is demonstrably irrational. That's not to say it's more irrational than you can stay solvent if you manage your position sizing correctly. But meaning there's a ton of opportunity. And that's another thing you just see with, again, the people that go to business school. And I'm not even some anti-system person inherently. You can go to a good business school and still have a bunch of resources available to you and still choose to educate yourself and have, original thinking. And so, but from the investment banking, private equity, stock trading, right? They're all the same technical indicators, the same sort of quote unquote due diligence. And it's just never, right? You look at the market and say, right, the big wow factor, people want to make money quickly. That's always with gambling, with speculation, with quote unquote investing. The real generalizable concept is a rapid return, right? You can buy something, how little risk can I take for how big of a return can I make? And so that's the generalizable concept. As long as people are entering into consensual agreements, contracts, bets, whatever, it doesn't matter. They're all just words. And so you can get what you sign up for. The point being, that's where you get the reverse, inverse reaction, reverse inverse serving reaction of people saying, you made your money illegitimately or, too fast, effectively. And so, but the reality is just you have economic progression, different countries, supply chains, the whole slew of news cycles, policy, all of this stuff we always discuss. And there's just going to be development where these inefficiencies are present, where you can make extreme appreciation, right? 0-day to expiry option contracts, any sort of natural disaster, any sort of extreme policy ruling, right? Netherlands making capital gains tax on unrealized appreciation is the most hilariously stupid thing I've ever heard of. And then being in a European Union, being surrounded by other liquid markets, where it's just I can't see anything besides profound negativity occurring there. But we'll see. The point being is the generalizable concept of extreme appreciation, making money really quickly. And so that's just a facet of the economic supply chain, the fundamentals, so to speak, the boots on the ground, the brick and mortar, the shipping the containers, all of that stuff just provides these inefficiencies where extreme appreciation is possible. And so, and then you're just trying to get into those events as, as safely, as reasonably as you possibly can. But the sentiment, the market is irrational, completely true. The managing reality of the historical sentiment, the market can remain irrational longer than you can remain solvent, only if you're an idiot and don't know how to, position size. And so for example, right, because this is, we're still out of the money, but we're right around where, this same move, if we break $1.50 to the downside, we make $450. So that's, that's a weekend. Hey, it's Friday, $450, go buy a new pair of hiking boots, go buy a tank of gas and a hotel room, go to a new state park, whatever. I mean, it's like a something. And so you see this move, or meaning me, I see this move, and it's just like, oh, this sucks. But again, if you're not over leveraged, truly managing the downside of a trade is just not being in a position that you're on margin, or you can't, because it's just, if you don't realize the trade, you just look at a red number for a little bit. And again, if you're playing momentum, like it always comes down at some point. And so point being is like if this, and it still very well could, but like this, again, the 23.5 to 26, I don't even see that as outside its normal trading range. So again, if the given stimulus, the Supreme Court ruling would have caused a break from this normal trading range, that's when I would have called it more of an event that had some sort of sustainability, or at least broke out of a trading range. And so a lot of these economic events, to me, tend to be more of these just brief, extremely transient fluctuations, as opposed to any sort of sustained movement, even intraday. Because again, assuming it kind of just carries on as is, back to normal trading patterns. I mean, we started right here, now we're right back to 2473. This whole fluctuation took about like 15 minutes, and then to be back here maybe about 20. The point being is, if you manage your position sizes properly, the psychology of going into the negative or a trade going against you is just more time. I mean, and again, I do not have constitutional rights. The psychology, if you're not overextended, I don't want to say you forget about it, but you just kind of like don't, right? You just like kind of like let it happen. Because that's, again, when I'm sitting here yesterday, someone was expressing, maybe Liz Young, or I guess it's Liz Taylor now. It's still a bummer. but talking about clients not having more, like they'll like sell stocks at 60-70% losses after 1 year. And to me, that's not even within a reasonable expectation of normal, again, economic, like speculative representation of economic development to even manifest. And so people's people's attention spans way miscalibrated to what the actual development timeframes are. Point being is, if you just have a trade that whether you're long or short and goes against you and you're just willing to hold, I mean, that's all just about position sizing. And again, if you have cash flow outside of this market, because I come from a place where you just have a chunk of money, the chunk of money is enough to be something, but right, so you can't, like, if I have cash flow and I were to go into a negative trade, like, I mean, and I have to wait, and I'll have to hold this trade for another 2 months, 3 months. And again, this stock specifically, because it has a dividend, I'm not a big fan, but it's a small dividend. My position's small enough where it's not like the overall movement of the equity is more important than the dividend. But if I had a job outside of here and a trade goes against my favor, I just average down. Like, I never want to be in a position where I'm really like dollar cost averaging. Just that's my strategy. I'm buying something every week or every month. I think that's silly. If you can't sit here and watch these things all day, every day, you're not going to be able to capitalize all of these little fluctuations. And so, but again, to quote unquote day trade your entries of an investment position, you know, if you have you have a good job, you have $50,000 on the sidelines, and you say you want to invest that money, right? Then you become a day trader for like 2 weeks just to get a feel for the price action. When's a good appropriate entry, trying to time the market as best you can. And then if it doesn't go immediately in your favor, you can just cost average from that. But point being is, if you just don't overextend yourself, you can just cost average as well as just wait for the move to happen. Again, all of these, especially to me, if you play the downside on something that's cyclical or the upside on something that's cyclical. Again, these companies can always go out of business. I always just like the downside so much more than the upside. But you just kind of wait for the move to happen. And that just really comes from not overextending yourself and realizing there's so much opportunity where if you miss a trade, you can just go look at a different sector. I mean, you missed every single movement of all of those trades all of the time. And so I thought that was again, we're still kind of, to me, I'm just thinking this is going to go right back to where we're at, which is still just kind of wonky. So we'll check back in later. That is what I have for you now. Friday, February 20th, 4:19 p.m. 1 minute too soon again. But the week just finished up, going through a little bit of the price action. We did have some good stimulus and something to talk about with the Supreme Court ruling on Trump's tariffs. But just taking you through the price action. Again, American Eagle's doing on that wonky shit. Don't really know. It's basically, to me, it's trading like it has a floor, like an absolute concrete floor at like 23 to 24, 23.50 to 24. But then once it gets off that floor, it has absolutely zero momentum to the upside. So it keeps just kind of like drifting up. So we closed today at 25.26. Again, right in that 24 to 26 range. After we bumped up from this 23 to 24, I see that as the relief from this move down, and this is just kind of indeterminate. Up or down would not surprise me. Any sort of break and sustained hold above 26 would indicate that we'd be trying the 28 once again. Still short, still bearish. This is something I plan to hold again. We're getting the next 2 weeks will be the earnings. We'll see how it trades up into earnings, but this is something I probably will hold through earnings. And we'll do assessment if I want to hedge it in any way once we get closer. But regardless, I was hoping for a little bit of a payday today, or at least just, a move into the profit, but we didn't get that. And so we open up, normal kind of, again, wonky trading action, but normal wonky from the previous, 5-6 trading sessions, the portions we've covered. We get this clear movement up. This is when the ruling gets issued. And then again, within 3 minutes, we go from the beginning of this candle, 24.70, touch 25.75. So we're looking again a good solid dollar move, a serious momentum shift in the trading action of this security. But again, if you're not sitting at your terminal, this was a planned event, so you could have. But again, what direction was it going to go? Did we know the ruling from the Supreme Court? No. Do we know which direction that's going to cause the movement to go? No. And so it's like, again, not a tradable event to me. There's a lot of these little things, as we covered in the morning little segment, that some of these things have big impacts, some of them don't. It's really stock specific, sector specific, how impactful specific. I don't have a good gauge of which one's which. So this one was just kind of big move, blah, and then we're like right back to pretty much the same exact trading behavior, within 20, 30 minutes, 3, 6, 9, 12, 15, 18. So from there, about 30 minutes. We'll call it 30 minutes. And you can see it if my cute face wasn't over. What in the world? Wasn't over the screen. But regardless, we have that fluctuation. We come back to pretty much the same pattern. So once that happens, to me, in my mind, this is after the announcement, before the press conference. So to me, then we have, another event you could have tried to trade if you have some sort of insight or thought, was the actual, again, Trump standing on stage, sitting in front of a room talking to people. A lot of times when influential people talk, the market will move. Again, what direction and how severe, it totally depends on what they say. So another event where it causes some sort of volatility. How do you want to play it? Do you want to play it? Typically, it just doesn't change anything I'm doing unless it's seriously substantial, which I don't see this as anything substantial for American Eagle. We get the actual ruling 6-3 saying that the tariffs are unconstitutional, effectively. But then we get back into this. I hear Trump talking, I can issue a license, but I can't charge a fee. So what scenario is that presenting itself? What does a licensure do? If I have some sort of intellectual property, I say I have the rights to this, you can use this property. If I'm a nation state, if I am the United States of America and I'm the president and I give you a license to do what? To do business? Is that like meeting the approvals? If I'm shipping in some product, it has to meet the FDA approvals? Like what? I don't, a licensure, again, from a nation state to another nation state in the terms of trade, what licensing are we doing? And so I wasn't really clear on what exactly he was talking about there, but saying he was able to create, he can issue licenses but can't charge a fee because that's a tariff. And then we get into this legal world again. If you're just watching these videos, I've done extensive talking and discussion and proofing. And what I do with language is one of the chorus things, right? The phrasing, you can't break the laws of physics. In reality, in any meaningful time period, you can't break the law. And the law applies to a lot more things than just like statute, judicial, given nation state, right? Common law is how everyone behaves inherently. And that's emergent from physics. And so the statement, you can't break the law over any meaningful time frame, is like extremely true. And so in jurisprudence, when we're practicing law, these rules that everyone inherently consent, that everyone inherently experiences, this is right, this is wrong, so on and so forth. All right, we get back to this conversation of precedent. Precedent is bullshit. Words are naturally defined. Fluency is influential. Words pair up to one another. So the entirety of precedents in jurisprudence is basically saying this word means this in this context. This word means this in this context. Proving words are naturally defined literally just erases that entire conversation as an empirical scientific fact. And it's proven. And so, not really sure what we're doing in there. Again, the whole world is extreme fraud, extreme intergalactic super crimes. But the whole conversation around precedent and jurisprudence is scientifically it's fraud. It's wrong. It's wrong. And so, meaning it doesn't matter if he calls it an embargo, tariff, fee for a licensure. First of all, what question are we asking? Is basically, can Trump use the entity that is the United States to say any country that isn't the United States has to pay some sort of fee, has to give us some sort of money? Again, what word you put on that it's the action's the same action. And again, the whole conversation of precedents, jurisprudence, this word means this in this case law is dog shit, garbage, horse water, just throw it away. Truly. I mean, it's scientifically proven. Not that that science seems to matter to literally anybody. But that's kind of what goes on there. The whole, in addition to that, where it's like, if you're an authoritative body, as we've emphasized extensively in the law, you have to give definitive guidelines. When I'm over here and it's like the FDA says I might be able to sometimes maybe sell CBD enriched alcohol. Oh, probably not. Oh, I have I'm going to go through my whole contract on that shit. But again, it's just everything's projection. Nobody actually does what they say. I have a business partner in contract that is a personal liability lawyer. Like somebody does something wrong to you, they will go like defense trial, the whole thing.
Here is Article 1, Section 8, Clause 8 of the United States Constitution. Here is our joint property. Here is science. Do something. No response. It's just this projection, this facade of character, integrity, the American dream. And people are terrible people. They're just honest dog shit. And so, but point being, back to the tariffs, any sort of judicial ruling that isn't direct, distinct, and clear, like, is no. Like, when you have, again, lawyer, I'm trying to think of the exact case that I referenced before, but he says this might be illegal, this may be, this could be. No, if you're a judicial body, if you're the Supreme Court, if you're any sort of judge, your own quote-unquote opinions, but your own statements and definitiveness within those statements is a requirement. But obviously we don't have that, and so it's just like you never get definitive action. That's what I've been sitting here and just, can I sell CBD enriched alcohol for literally a decade, and it's legalized as the statute is written, has never been not legal, and then can I get approvals? Blah, 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 blah. So all this mucking around with indecisiveness, you may do this, you could potentially do this under this circumstance, is such nonsense. I mean, it's fraud, conspiracy, racketeering. It's all of the major crimes that no one cares about. And so that was atrocious, as always. But again, the law does not exist in any capacity whatsoever, period. Past that, there was some conversation about there's $175 billion that have been like taken in or accumulated through these tariffs. Do you have to compensate people for that? How does the businesses work? I don't know what's going on with that. Again, like what countries? I don't no insight. But yeah, I just had no insight on that. The ruling was 6-3, and now we have just issued again like a blanket global 10% tariff to everybody. So now on top of all this, I have no good indication of what. People will come out super aggressive on both sides. Oh my gosh, Trump bad, super bad guy. Oh my gosh, Trump. Trump. So you get that reaction from both, or you get that extreme. But my point, I get what genuine impact over what time frame does a given tariff have? It's 10% of what dollar does affect this dollar when we have 195 countries recognized by the United Nations. What? There's such a massive question. Is this tariff? What does it do over this amount of time frame? I have no idea. And so it's just like, again, if you wanted to go back to trading, that is like, it's good for the stock market. It's so general and bullshit, and every time it's just like, oh, less money. Again, you're going to get some sort of limit where, if you had a 1,000,000% tariff, it wouldn't make sense to operate the business. And then past that, you're just kind of like poking at consumer demand, how much money. Again, the seller, if you are within a profit range that is reasonable for someone to sell it, they're going to operate at that. It doesn't matter how much you chop down that margin. There will be an absolute cutoff, but you can chop down that margin substantially. The demand to me, again, is just demand elasticity. If it costs somebody, they're buying something for $20 and now it costs $30, is it still worth it for them to pay $30? That totally, establishes if the transaction happens, if the deal gets done. And so, again, that's just a huge, what does one given tariff do? Again, I don't even know what goods, if it's just all goods. Again, there's so much economic movement within that simple question. It's just like, I don't know. And so that is what we had in terms of again, something to talk about. Yesterday was absolutely dead. I even I think I did like a 5-second video, and I was like, I have no idea what to say. And so you do have those days where there's literally nothing. As a tradable event, it's just kind of a blip that didn't really do anything for me. Knew it was coming. Had no effect on my trading. Anything else on SanDisk? Again, we went in the wrong direction on both. But I think the short that I added here was one other, just another whopping share. But I think that was at like 621 yesterday, right at close. So yeah, right around there. And so, wrong direction on both. No real major trading anything. This is looking way more bullish now. I'm still within the range, but like I said, when it starts creeping back up here. But again, then you get into the conversation where if I were to close these trades, neither of which I have any interest in closing, certainly at a loss, because these are positions where I just hold indefinitely, and it's like the trading thesis of, do I think American Eagle is cyclical without a bunch of innovation? At some point, it's going to be lower than it is today. Yeah. So it's just like that. I don't see what would change that. If anything, it would just be hedging to the upside if we look like we're going to skyrocket to $5 million of a share on American Eagle because their new jeans just saved the world. Sydney Sweeney's out here saving cheeks, saving people one set of cheeks at a time. But regardless, this looks pretty bullish technically with the momentum. The technicals don't really matter whatsoever. Because if you looked at a trade like this and it was like, oh, the RSI, relative strength index, is overbought. It's a little hot. It's over 70. you're missing everything. But this is not looking ideal. Definitely not ideal. Super small position over here. We'll hold this indefinitely. If we got another big pop up into like 1,000, I would add probably like one or two. I will not go over like five shares here. And frankly, I don't even like having two open trades at the same time. And again, both relatively to my account size, both extremely small positions, but just the headspace. Like if you want to make more money, find the trade that you're have more conviction on, or again, have a small starter position in both things. One goes in your way, close the other. And that's kind of what we started to do with Micron and SanDisk, one long, one short. But again, hedging, just to me, like if you have to hedge a bunch, it's just like you don't have enough conviction to enter that trade to begin with, because there's always opportunity. If you have some sort of risk tolerance, you can get on the market and lose $100 a month, $1,000, $1 million a month, whatever. There's trading's fun, like, but then it's just I see so many people just like, this is the trade, this is the big moment, this is the big kahuna. This is not. It's like, chill out, Bill. Go for a walk or something. So SanDisk is looking bullish, but again, both today there was some stimulus, but then again, this is this broad conversation. It's like, okay, tariff. Let's assume the data is there to say that is good for stock market. Then what does that mean? The whole stock market, the S&P 500, the Dow, this American Eagle, not American Eagle, Tesla, Nvidia, Google, like what? So this whole conversation when you see CNBC talking about the market, and again, just this genuine or general sentiment that American dream, stock market up, prosperity for all, as we read and talk about in the book. It's just there's market dynamics, and you just have to learn to adjust to see how they do and try to make money when you can. But so that was a good talking point for today. Anything else? Jemmy's still over there on the descent. Again, that was just to throw another $100 to average down. But Jemmy, that's the one sloppy thing in the portfolio for sure. But again, all of my starting positions are always just so small. But this one's down like 80, 70%. So stupid. But that's on me. But regardless, that's kind of where we ended up today. Again, I don't have constitutional rights. That is still the most pertinent thing to trying to manage money, because every bit of structure of your day. Friday, time to take everybody have a nice weekend, go relax. It's like Brad can't relax because Brad doesn't make any money to go relax with. So that's fun. But you guys have worked hard. Holy shit. Another week of lollygagging on some meetings. Another breathtaking week of innovation for you guys. You guys really did a lot of math and science. I saw that coming out of your guys' channels. And so I love having the headspace of a full-time trader, which is easily the most thick-headed headspace that exists. Basically running a full trading platform without actually making any money. As you can tell, we are getting towards the end of February and we've not taken a single penny because we don't make any money. That's fun. The one trade we closed was American Eagle for the plus 250. So if we were to close these now, it would be down about 200. 300, I think. So this is down 127, and this is down. So this was closed as is. They would be, like 350. So off to a rip-roaring start this year. But again, the trades are the trades. Like you don't pick when the movements happen. You just try to maximize them when you get in the right place at the right time. And so a good talking day, not much to do on the actual trading aspect. We just see one of these news events where it's kind of like something happens and then nothing kind of happens and you're kind of back to whatever. And so this is an event I would say certainly caused this movement, but was it any sort of sustained anything? It was a nothing burger for me. So that is what I have for you for the trading week of February 20th. It is now 4:36 p.m., and that is it for the weekend. See you on the next one.